Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Can I get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. You're a little late today. And how are we doing in YouTube? All right. Good morning, everybody. Well, thanks for visiting Trader Lab today. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. This is about an integration of multiple time frames using an auction process. The basic function of the market is to figure out what price is too high, what price is too low, and what's a fair price. It's the only reason we have a market. And the way it does it in all time frames or fractals. The difference between, at least for me, a time frame and a fractal is time, of course, is the clock, and a fractal is a rotation and or consolidation. So in the intraday developing time frame, time is not really an element from a structural point of view. It is really more an element based on the participant structure. So we don't need the clock in the intraday developing time frame to be able to narrate the potential behavior, which if we've done our work and we actually have a trading business plan, when these conditions show up in alignment with the participant behavior, it might actually result in something called a structured trade. Now, in the Trader Lab, I've shared 60 PDFs of structured trades that are available to everyone in the Bookmap Discord Trader Lab community at no cost that you can take and reverse engineer. Now, the point of the Trader Lab is it's a group of like-minded traders who've come together to leverage their collective experience, and there's no cost to become part of this community. But just so you know, it is for serious traders only. It is about the business of trading and getting an understanding of differentiating the fantasy of trading from maybe what the business actually is. And most of us, when we come into this business, we have no idea what we're getting into. We have kind of an expectation or fantasy of what we think it might be. And one of the issues I have found, at least from my own experience, was trying to get the answer to align with my psychology and primal needs. Primal needs refer to certainty, confirmation, all those words, right? And trying to operate without fear. And we think the solution to fear and uncertainty and randomness is to pile more indicators on to create more certainty, and the term confirmation. So if you're using those terms, confirmation, it is telling you something about the direction you are pointed in, and confirmation doesn't exist in an environment that is 100% random 100% of the time. So that's something I want you to think about, and that's why I agreed to do the Trader Lab and to offer my experience, because we've all walked in the same shoes. One of the problems I find, or at least found for myself, was I always had winning trades and strings of winning trades. So I always thought that I was on the right path. I just had to make it better. So I spent years working with processes to create more certainty. And I thought it was just a matter of working at it and getting better at it. But what I found was everything works at times. Randomness exists at all times in the market or in what we do, because it's a random business, really. It's gaming. So if I'm in a random environment, how can I create certainty? I can only The only thing certain is if I have an edge and I execute it, and then the outcome is random. If we solve, in my opinion, for gaming, like the same way the casinos have solved it, we then have a proven business model that we might be able to overlay trading on, which is also a gaming process. And then if we've done the work, and you can do this in Trader Lab, working with other serious traders looking to build out a career path, and I'm not saying that'll work for you, of course. There's a lot of obstacles to actually being able to do this. And most of them, I believe, are psychological. There are ways to work around that, but it doesn't mean any specific individual can. But that's why the Trader Lab exists. And there is a link in the bottom of YouTube if you're interested in being in a community where the goal is to build out the business. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. And this is what the PDFs look like. You can access those in the Trader Lab. There's 60 of them. This is an actual trade, but there's many trades that are shown. And a lot of also what's in here, these are done like 5 years ago. I was doing research and working with Bookmap developers on ideas. So some of them are integrated now into current tools that are available in Bookmap, and others have been, as they say, thrown out the window. This is Investor RT. It is my higher time frame software. It is very good for the auction and using the volume profile, which is the representation of volume and price. It helps us see the participant behavior. The other thing is it exports cloud notes, the Bookmap. So, and when I get the Bookmap in a minute, you'll see why it's so nice to have this, because now I'm not manually entering a lot of levels during the day that are changing. So this keeps everything up to date in Bookmap. And there aren't that many packages that actually are able to do that, but this one does it really well. So let's go back to the higher time frame. Now, when we talk about time frames, and this is these are RTH candles, they are based on time. So yes, it's time frame. So the volume in the RTH, whereas most of the volume takes place because the cash is open, is what we're most interested in. Now, you guys have been following the stream, and you should actually look at the stream every day if you want to see a continuum of how the market unfolds and how we can take these structures and maybe use them in our trade plan. Now, yesterday, actually, let's go back here. This is the sell-off from Tariff Friday, and this was our target on long trade. So we actually were long in the morning up to here. And then I've repeated this a couple times, but I want to bring you back. And then this was the high of the day, no clue, but it was our target. And then we got into a sell structure and it was shorts. And then it's, oh my goodness, all the way down. Then on Monday, with the tariff news and everybody losing their minds over it, we opened basically here. This is a high volume level. Now, the yellow lines are retail prices. Think of it like shopping. And the auction is a shopping experience. When you go to the store, you're also participating in an auction, but it doesn't change. If the price gets too high, you won't buy it. You'll shop elsewhere. If the price goes on sale, you throw two in the cart. And if it's retail, like this yellow line, it means it's a fair price. If we open above, let's say if we trade above what was previously a fair price, it was too low. But if we open below it, it is now too high. And if it is too high, we can come down to the next retail price and check, is it still too low? So in the morning on Monday, short was here. Cover target was there. Long was from here. Once we got above there, it was the squeeze area and all the shorts. So now what does that do for us? Well, what was Wednesday? I get my days mixed up. This was support from this day, the retail price. What did we do? We opened. We got sellers in the morning. We tested this. Now, it's an area, there's no precision. Wouldn't we love precision? No, not so much. And then what do? Those early sellers get squeezed, they become buyers. And where's our target? Well, on this day, the target was there. We just missed it. On this day, we get the sellers and our target is here. Now let's go a little further. Now what? Where's our target? Yesterday, we had several targets. We had to get above this, and our next target was 85.25. Now this is yesterday, but this is before we got there. And then we have another target up at 61.09 and 61.18. And why are we looking for longs? Well, even though we trade intraday, long, short, because we're day traders, we know there's also shorts sitting in here. So there's buy stops. So when we think, at least when I think about this, I am thinking in multiple time frames. So even though I'm a day trader, I'm going to trade whatever's going on per my plan. But I'm going to use auction-based levels, which I'm going to show you in Bookmap. But at the same time, I'm going to be thinking about the higher time frame, and that sets up levels. This is called a single. It's up around 15-ish. We have that as a target. We have 61.10-ish as a target. We have the ETH high as targets. We have the ETH low. We have a lot of things going on here, right? We have the gap because we opened in a gap. RTH open is here. ETH high is there. Yesterday's high is the gap. And let's look a little further. We have the ETH low is over here. Let me see if I can show you that. And that all these have statistical probabilities. Now, being a trader, I don't know, of course, what it'll do, when it'll do it. If it'll do it, I don't have any clue. So my job is not to predict. My job is to attempt to align. So now let's look at the RTH open. And if you have questions, please post them. And remember, these streams are available. I do make them public from time to time. You should, if you're interested in understanding what's going on here, watch them. And you're going to see, what you're going to see is the market is random. Yes. But if we can understand a language, and when I talk about fractals, I'm talking about this. This is a fractal. There's no time involved in this. There's only behavior. So how long does it take it to go from there to there? It's 30, 40 seconds. So there's no time. It's what's happening here. Selling icebergs. What's happening here? Passive buyers. What happens here? Buyers are in control. What happens when the sellers get under the buyers and I take out the buyers right there? By the way, why did it go up from there? Because there's a buyer. If the seller now is here, this is the be alert because I'm below the buyers, and this is the break of the buying support. This sets up a short. Not any more complicated than that. I'm just giving you a little sense of something here. Now, let's come into the RTH open. Where's my resistance, you're asking? It's actually right here. So what might I do with this? Well, how about the first? Now, there's another piece to this, and all this is posted in TraderLab before the open. There's a lot going on in TraderLab. If you haven't checked it out, I'm going to suggest maybe you do. And there is a link in the bottom of YouTube. So all of this is posted. What were we looking for? Well, you would have an opening trade plan for the open. We have specific trade plans in the TraderLab. Your opening trade plan in a gap would anticipate the following possibilities. Number one, with a gap is those who are long from yesterday might, underline, remember everything's maybe in this business, might take some profits. If you got a gap and you had ridden yesterday up, might you take some dollars off the table? It's a question, but the answer is, yeah, you might. And the word is always maybe. So when I say you might, that's all you got in this business. There's no it will. It's it might. And if it might do that, then I see selling here and I come into the RTH open, I'm going to be looking at what happened here. I'm at my ETH high. I also have a high probability of getting here. So I don't know if I'm going to be a buyer or a seller. And you're going, gee, that's no help. Well, guess what? I can't predict. What I can do is anticipate based on my understanding of market mechanics, 45 years of trading, and participant behavior, retail trader behavior. And I have an old saying that I've shared in Trader Lab. Think like a retail trader. Don't act like one. So I'm thinking like a retail trader. What would they do? Not what do I do? What do they do? What do they do? They get a gap. They might take some profits. That's what they do. What would you do? Think like a retail trader. That's what I do. I think like a retail trader. I don't do what they do. And I do take stops, though, just like a retail trader. We all do. That's not the point. The point is, if you can anticipate behavior and then look for the footprints of the behavior, then maybe you can participate. So right here is a sweep. Now, when we have a sweep, obviously anything can happen, and I'm not one to predict anything because it's not my skill, and actually it's not even the business we're in. We're not in the prediction business. We're in the alignment business. When I get this, and I have this yellow line's called developing volume point of control, it is the retail price. And when it starts at 0 at RTH open, it's the highest volume. So right here, and I'm looking for a short, and it's very dubious because of this. You know, if it hit this first, because I have a high probability statistic, and you have to vet these, and they're all available. You can download those in the Trader Lab. I will say it's over 90% probability, but there's other things too. This is over 80% probability. You know, so there's other things going on here. So I know now I'm looking for a short. So let's see if I get a short. Where is it? Here it is, right there. This is a Trader Lab structured trade. Now remember, it's not mechanical. What am I looking to accomplish here? Longs in the market, gap, potential gap fill, and then continuation higher to continue in the squeeze-area based on that chart I just showed you that showed you the higher time frame. I am trading in multiple time frames, but as a day trader, I can trade rotations, which is pretty much what I do, but I do not want to forget the dominant time frame, which for me is squeeze the shorts. So I can trade long, I can trade short, but I can never forget who's on the hook. So the market goes both sides, right? Well, what happens if I get a short first? What does that do? Let's use the logic. Let's come back real quick to this. What's in here? Buy stops above the market. If I get sellers, now that's yesterday. If I get sellers here, what does that add to the market? Shorts. If I get sellers, because these guys take profits, I get new shorts. Then, if these guys are still short, might they use the counter rotations to cover? That's one part. And to get long, and then the early sellers, or any sellers so far, become fuel for the rotation up. So I have choices as a trader. I can take both sides. I can do anything that fits my edge. I can also not forget that if I'm taking shorts, I'm on maybe the weak side, because those shorts can get squeezed and they become buyers the same as these guys might, underlined, become buyers. I hope this is logical. Watch. So VPOC migration. So this is a short. This is a short. All structured trade. Stop is out here, and you have your helmet on. Let's watch. This is the first trade I took. VPOC migration. Now I'm going to start labeling some stuff in here for you. This is a process. I'm also going to draw some little lines for you. And the reason I do it is to help you see structure. I don't use indicators in the, I guess you might say, the typical retail approach. Been there, done that, just like all of you. And it didn't do anything for me. It just added more noise, more conflict, more randomness. And there's an old saying from the early days of computers, you might recall this: garbage in, garbage out. It's not that you can't use indicators. I suggest that you learn how the market works and then apply indicators that are appropriate. And in the Trader Lab, we have different trade plans for different conditions. The open is a specific condition. Directional trade is another one. And then rotational trade is a third one. So if you're trying to use indicators, which of course I understand, remember, what are we doing with indicators? We're trying to put the market in the box so that it repeats. And the problem we have, at least I always had with indicators, was that everything worked. The ultimate test, I think, is to close your eyes on sim and push buy sell and see what happens with a 3-point stop or a 3-tick or whatever you want to do on each side of the trade. See what happens. You're going to have winning and losing trades. So the fallacy I have found is that the fact we have a winning trade has nothing to do with being a profitable trader, because gamblers win at the table. But unless you have a lot of luck, or you play a game that requires a lot of skill, like poker, the edge goes to the house, and you're going to give your dollars to the house over time, even though you win at the table. Is that logical? Well, it's the same in our business. So take gaming. That's your business model. If you have any questions about this business, you already know this business. Go to a casino. The thing is, which side of the table are you sitting on? That's the question. And if you're like most retail traders, you're sitting on the wrong side of the table. So this is the first short. Just showing you structure right now. I'm going to try to get along here. By along, I mean move along so I can show you these trades. Now this is support. So the first trade I had was short down to here. Actually, now my targeting is lower. I'm looking for the gap fill, just so you know, because I have no clue. Remember, I'm the thing I know for sure is I'm clueless. And that's not, to depreciate myself. I'm not ignorant. The thing about clueless is accepting randomness, because I don't know where the other side, wherever they are, whoever they are, them, you always say they got me. Who are they? I don't know who they are either. I just know they are the other participants. So right here is structure. Now, I don't know what's going on, right? Let me show you what this says, language. Up here is a micro high volume structure. It's too high. I leave it. I now leave it, and now I have a high volume node here. It's right there. It's too high. I leave it. This is a consolidation. When I leave it, now this is the next high volume area. I rotate. I leave it. It's too high. As far as I know, we're going to zero. I have out here, I rotate. Now let me bring you back here. I gotta move this back where it is. Right here, this is too high. This is a low volume node. I'm just gonna I'm not doing everything I do because I'd be marking all of these, or at least I'm aware of them. I don't have to mark them, but I'm gonna mark them for you. Because what these are, these little, they're called distributions, and all they are is consolidations, and they look like this. This is what a consolidation is. Inside of a consolidation is volume. So this is showing all the volume that's on the chart. This is only showing the volume from the RTH open. So this is primarily what I'm interested in, and I'm interested in what's going on right here. So all I'm seeing here is this, and the micro high volume is right there. I'm going to put a little line so we can look at it. So right now, this is the outside edge. And what I'm looking for is south of the border. So right here is the outside. So that's called a low volume node. It separates this volume here, which is too high. I'm not paying that. We leave the store. That's a store. We're now in this store and we're shopping. What do we think of this price? Well, if it's too high, we're going to do the same thing we did at this store. We're going to leave it. If it's too high, we're going to leave it. And as far as I know, we're going to leave it until we don't. Let's look at the change in behavior. What happens here? I break high. I'm no longer breaking low. This is a warning Will Robinson moment, as I call it. Where's my outside edge? It's here. What was too high? It's there. So the idea is not to get over this. Here, I break up and I'm good. I'm not over my low volume node. Feeling good, Lewis. Looks good, Tom. This is absorption. Here's the buyer. And why doesn't it go up? Well, outside edge. And now my seller, this is order flow, is below my buyer. Going south. Feeling good. But what do I know? I know this might be too low. And I get something called VPOC migration right here. This is an event in context, and this is very important. Let's look at this. This is an important sequence. This sets up two possibilities. One is along, and the other is cover. It could be either one. Here's the retail price. Now let's look at what was going on. Too high, too high, too high. Remember the shopping experience. I'm not paying that. Get out of here. Come down here. Break high. Change. Now what? What's too high? Out here. What do I do here? Sellers, below the VWAP, below the mid, and below this. Resistance. So far going down. Now, what do I know about this? Buyers are here. Volume is there. Buyers get above the sellers. This is a long trigger. Now, the problem I have is I'm short. What do I do? Well, if I'm below this, I'm okay. Right there. So my stop is sitting out here a little bit. Here, actually. And now this, let's go back. Sellers are here, buyers are here. That's the delta. Sellers below the buyer. And right there, I give a little sigh of relief. Okay. But now my next obstacle is this, because this was too low and the volume point of control shifted higher. Remember what the volume point of control is. It's the shopping experience. It might say, remember maybe, that this is too low. So this is support. So right here, I come down and I'm thinking, okay, I got to get through this and, go on my merry way to fill the gap. Support, resistance, resistance. I hold my support. What does that tell me? Let's look at the language. It says, and I read this as language, it's a foreign language, and believe me, it's foreign. So I speak the language of the market by reading the participant behavior and understanding what creates this behavior. Sellers there, buyers here, break high. If I pull back and it's too low, I'm going north. When I see this is too low, teeth chatter, I see this, I'm thinking I might be okay. If I get below this, I'm going to take out these guys. Instead, I get my buyers. Time to get out of Dodge. This is a long. So now, right here, it's either cover the short, get out, or consider a long, or both. Let's watch. There's a test. Where's my resistance? Remember, it's there. What do we have here? Mid. And I think maybe VWAP. Mid anyway. Oh yeah, VWAP's here. Mid is here. What do we anticipate the mid? Sellers. Yeah, but where's my support? It's there. So if I get below here, wonderful. So for me, this is support. So let's watch. We break support. Okay. So for this, now for me, I did not take a short here. I covered short and I did not get back in the short. Just telling you me. Doesn't mean, anything more than that's what I did. Where do I come back? Watch. I come back to my resistance. This right here is potential support. When this is resistance, this sets up a counter rotation. I get my sweep. Now the sweep sets up a reversal. I get VPOC migration. This now is resistance. So right in here, I'm looking at this. I see this, and I know I need to get below this. And I'm still looking for to fill the gap. But let's go a little further. So now in this condition, so I get my early selling, right? What am I thinking? If I get early selling, I'm going to squeeze these guys out, and then I'm going to start squeezing out the higher time frame. That's my plan for the day. And of course, how it does it do it? Who knows? There's my sweep. This sets up a potential long. Now, the problem I had with this here is I'm in the middle of nowhere. I'm like I'm in space. So I tend not to trade in the middle of nowhere. I narrate it, but if I don't have something that makes sense to me, I don't do anything. So I know I got resistance here. Let's just watch. I see the sweep. I get the VPOC migration. Now, the thing with VPOC migrations is we can get a couple different behaviors. We can continue lower or we can break high. If we break high, it sets up a reversal, and this potentially, at the moment, remember, I'm in a real-time narration, so I'm like bobbing and weaving with this thing. I'm trying to stay in alignment, and I'm also keeping in mind that I don't know where the other side will come in. So I know I don't know that, so I can't, all I can do is narrate it and try to recognize change. This is change. So what do I know here? This is my low volume node. This is the outside edge of this distribution. I think that's right. So this separates this auction. This is a distribution. Too high, too low, too high, too low, and then break high. This is retail. I break high. Now, let's look at language. What does it say? This might be too low. Remember when we were coming down, it was too high, too high, too high, too low. Change. This is my outside edge. So now I have to find a way to get long. Let's see if we do. Let's see where it comes. Low volume node. Resistance, support, break, resistance. If you're trading rotations, that's a short, not for me. Sweep, sets up the long, forget about it. Nothing to do with this. I'm going to show you just another little piece here. This, now this takes, this is actually a short, but it's advanced. And remember, look at that. I want to be long primarily. So other than filling the gap, so I got a couple possibilities. This is a possible short in the Trader Lab. Why? Variable high volume node. We left this behind. There were sellers there. What might happen if we come back? Well, there might be sellers again. Now, if you're like me, your teeth chatter and you don't know what's going to happen, except we come to a location. Now, right here, I have micro high volume. I can't do anything with that. I have location, think real estate. And this is a counter trend trade subject to how you define trend. What happened over here? Right here, my buyers are here buyer. Sellers take a shot here. Buyers are there. Buyers are above the seller. Sellers get below the buyer. This is a possible reversal here. Then I'm looking for a test here. What happens? I get above these sellers. Nothing to do. Buyer going to the moon. Seller here. Micro structure. Micro high volume. This is your little auction. Sellers, buyers. Not actionable, too fast, can't do anything. But once we break away from it, I know it might be too high. And what else do I know? Alignment. There's my sellers. I am now below my buyers. Sellers are in control. So what do I know? Where's my outside edge? Well, there and there. So I'm going to put a little box around this thing. And what you're going to see is it's a consolidation. What I tend to do is, since I don't know what's going on, and what I mean by know is, if it's all random, how can I know anything? I only know maybe. I'm going to keep mentioning that here in the stream because I understand it's all about predicting and confirmation and, being right and attachment to knowing what's going to happen. I'm right. That's what we do. And unfortunately, that's not what trading is, in my opinion. Trading is none of that. Gee whiz. Come on. So basically, it's from there to here, because this is your swing and there's your rejection. So this is too high. If you put a little box here, you'd have the same thing, and the outside edge would be about here for this little box. In fact, I'm just going to throw it in there just to show you. So this is too high, and now this fractal, the next one up, is too high, and now this is a trigger. So let's just look at the behavior. Notice where we come. Does this make sense to you guys? So the short sets up there, or even here. If you sold it, you could sell it here, but your stop is up there. And then you're trying to come here. It's called mean reversion, underlining the term mean. So this is a short to here. And then where are we going to go? Well, we know this is too low. That was the last place, so it's support. Let's see what it does. Sweep here, another target. So what did we do? Sweep here, sellers, short, right? Got taken out, didn't take the next short, deer in the headlights, came down here, think you're going to zero. You get your sweep, you come across here, you squeeze out the shorts. Why are we squeezing out the shorts? Because we want to be long. But as day traders, we can trade mean reversion. Remember I said we have separate trade plans. This is outside in trading at the moment. What happens down here? Potential long back to here. Let's see what it does. Remember where the location is. It's there. There's the sweep. Let's see if we come back. Now, before I do that, I've got to do a couple other little things. I've got to mark this, and it could do anything, remember. So when I come down into this, I'm looking against this microstructure, this area down here, because I had my long off of here, and my support is right at the top of this little consolidation. So I'm just going to put a little line here just so we have some reference. Here, you see the long, and where's your resistance? It is here, and you're going here, okay? You're trying to get there for the reversion trade. So this is still a mean reversion trade. And if you take it, it wouldn't work, but you hit your resistance. So, and this is the potential target here on mean reversion. This trade would fail. But what are we also looking for? Fill the gap. So it's not whether you take this trade, it's whether you can stay in alignment. Let me try to do something else over here for you. So that's a short. This is microstructure right here. That's a sell trigger. There's your volume right in there. It's too high. Come back to the mean. Too low. Where do we come back? Where's my resistance? Isn't it right here? Too high. Break. What is this? Isn't this maybe too low? There. And where's my resistance? It's there. And where else is it, you're going to ask me? Let me just draw a little something for you. This is a little sidebar, you know, if you ever watch the lawyers, TV shows with attorneys, they come over to and talk to the judge. Resistance. What's this? Now, when these are developing, so what I do, mentally at least, I know, you know, this is too high. There's my retail. But what's over here? The sellers took over. The buyers were here. The buyers are there. The buyers are there. This is resistance. I break low. I test the volume. Isn't this the same as that? Testing the volume. Testing the volume. Here, too high. My sellers. Volume is here. I break below. The buyers were here. The sellers are there. I break below. I come back and test. My stop can go there or there. I can sell this. My stop can go there or there. Where's my micro high volume structure? Let's go a little further. I'm taking you in fractals now. Just doing this so you could kind of see how you might, you know, kind of put your pieces together. Where's the fractal? It is here. Yep, get over there. So what happens here? Too high, break, trigger. Where's my resistance? It's there. What about over here? Coming back to support, sweep, fractal, suggests counter rotation. You know, if you take this one, if you don't get a scale, you take a stop. Life in the fast lane. Let's keep going. Now what? We're looking for the gap. Where do we come? We come back to the volume over here. We have another triggering structure right there. You can see it. It's right there. I'm going to put a little box around it for you. Now, the reason I'm doing this today, and I do different things different days here in the stream, it's just kind of to give you something to think about. What is going on here in this volume? Now, again, you're not going to be drawing lines all over the place. It's the reason I draw these lines here, and I always suggest in Trader Lab when you do replays, you stop and pause because you want to train your mind to recognize what it says, the language. So the way you do that is understand what's happening in this structure. The sellers are here, the buyers were absorbed. There's your icebergs. They're selling, okay? Buy deltas, aggressors, and buy stops. That's why delta can be really very misleading. This was absorption. There was buyers here. There's the buy iceberg. So absorption into resistance, into selling icebergs, break. If I break, where's my resistance? It's here and there. So I could be selling this if I want. It's all up to my plan and the time frame I operate in. And I was on a short here. I'm trying to remember from where. I can't remember. I have to look at my other computer. But I'm trying to get into the gap, So that was my trade. Because we have a high probability of either taking out yesterday's high or low. It's over 80%. Past performance not indicative of future results. I think trying to fill the gap is a good probability. The only problem we have as traders is it's random. Rotations are random. So it's about alignment. We get a sweep here. We come to the mid. Where's my resistance? Let me just move this around a little bit and extend it out. I wish they extended out. I've asked Bookmap to do that, but they haven't gotten around to it. So let's watch. Where do we come? And again, I don't know where it's going. Remember, I'm just narrating it. Well, what happened over here? Let's look at this. So I have that structure, I have this structure. And this structure is here, and the volume was there and here. So I come back outside. Now, this can make you nutty, but here's the thing about, and I don't know what this was. This came out, and there wasn't really any news. There was an announcement about sanctions on Iran, but that came out before this. So this was one of those things where it was like, what's going on? This is a potential short in the Trader Lab. But let's assume you didn't get on that. You're sitting here and you're long. And then you get this and you're, what happened? Because that's what I would do. I go, what happened? Well, now I got to look and go, well, what is this? And what do I do? Do I get long? Or do I use a counter rotation to get short? Well, let's look at what we know. We get the gap. We have a low volume node here, right there, separates these distributions. Let's see what happens. What's this? Where do I come? What do I do? How about a short? ETH low. Target. Why? Over 90% probability we take out either the ETH high or low. You remember that at the top of the stream, and you hear it every day here. And settlement. High probability targets. Which one? No idea. Doesn't matter, does it? What matters is alignment. Now, why would I take a short here? Why is this on the price map? Because it's an outside edge of this distribution. I'm not paying that. Remember? Shopping. And then statistic. And what was our target from yesterday? You do remember. I'm going to have to bring you back. 85. That was our upside target yesterday. It's high volume in a higher time frame. Now, you can learn this in Trader Lab. I can't, so what do I know? Target for the longs yesterday. What do I see? Liquidity. What do I know? Probabilities. What else? Nothing else. Watch. Now, I come down 182 sell stops. This is when your broker sends you the gift basket. And right here, going to zero. How would you know? Me? I don't. But here's what I know. I got this. So that was a high probability target. I tested this, which is a high probability structure, because it was a target coming up. If it's too low, which it might be, and in the ETH, it was too low. That's when I looked at, my trade prep. I was looking at this saying as, wow, this is important. Since we held this longs. And then, of course, it sets up shorts. Well, whatever. I come down here, and if I don't get below this, then I can flip around and start thinking about longs. But how do I know? I don't. Let me show you the trade, how this comes together. And if you have questions, please post them. I'm going to come up for oxygen in a few minutes. What is happening here? If this is an outside edge and it's too high, I'm not paying that. Ever go to the store? This is a store. And you see this, and somebody pays it because they got to have that can of tuna for the casserole tonight, but most won't pay it. The volume dries up. I'm not, there's 5 cans of tuna went off up here, whereas most are paying the retail price at the high volume area right there. That's too expensive. Yeah, but it's on sale. And then if I fall away from it, then this is too expensive, and that's too high. So now I come down and I'm doing this process. Too high, too low, retail. So what happens in here? It's on sale. I don't know that. I really don't. It's too expensive. Right here. I'm not paying that. Get out of here. It's on sale. It's too high. Retail. The volume fills in over here. I break high. Interesting. Buyers are here. Buyers are here. Buyers are here. I'm seeing these lows getting a little higher. Why are we going up? And I see sell red bubbles. This is delta. What's delta? Aggressor. If I have an aggressor and the market isn't going down, what does that mean? It means that there's somebody, a passive participant, absorbing the sellers. That's what's going on here. That's why this, and it could have, but when it doesn't do something, your antenna has to come out. It's got to be, what's going on? Buyers are above the sellers. That's something to think about. Buyers are above the sellers. That's something to think about. But where's my sellers here? Here. There. Because the market broke down. So I got resistance, micro, and I got something going on here. Resistance, something going on here. Why doesn't it break? Don't know. Resistance. Sellers here. So far, the sellers are still in control, but I'm observing we're making higher lows, and I have no clue. Buyers break above. Okay, what do I know now? I'm above these sellers. I'm above these sellers. I'm above all these sellers. This is a warning Will Robinson moment. What else? The volume is here. This is my retail price in this store. My low volume or outside area is right there. So this is now becoming support. This is resistance. I'm going to put a little node in here just so you can see it. That's why the stream takes longer. Because I want you guys, and everybody comes and visits Trader Lab. I don't know, if you've seen this before. So right here is resistance. And I can rotate back to retail. So right here, it looks like the buyers are taking control. My retail is here. My resistance is here. That's the outside edge of this distribution, this store. And either I'm going to break from here, test this, bounce off, or keep going. And I wish I knew. I don't. This is trading. Watch. I break above here. This is now too low. And I'm leaving the distribution. I want to get long. So let's watch. Buyers are here. All these guys are under the bus. Buyers are now in control. Where's my outside edge? It's out here, right in here. Here's my next high volume area, right here. So what I've done is I have rejected this. I'm going to draw a little box around it again so you can see it. This is what I do because I'm not using any indicators. I got to do something. So what I'm doing is I am bracketing where the behavior changes. That's all. And you could see it here. It's in the profile. All I'm doing is outlining the profile and I'm interpreting the behavior. So right here, I know I got support now. Now I break high and my objective is to try to get long here or there. Okay? Same thing as I was showing you here. Get short there or, even here is a short right there. So same thing, long here or here. And then looking to squeeze these guys. Watch. Where do I come? Let me move this over for you. What you're probably going to notice is I just do the same thing because that's all I have to do. Because I understand what it says. I don't know what's going to happen here, and I don't know what's going to happen anywhere. But when I see the change in behavior, I know what it says. This is a foreign language. You ever try to learn a foreign language or a musical instrument? And where's the stops, you're asking me? Here and up here. Resistance is here. Variable high volume node. Where are we going? Well, too low, come around, low volume node, resistance, and where's my variable high volume node? I'm getting into advanced concepts here. I've done webinars on these. If I break above this retail price and this was too high, then I can come up here and test it. Now, you have choices. These are advanced processes. I get the buy sweep. Now, two possibilities, and we discussed this in TraderLab. This is a target. This is a counter trend rotation, or right here is the potential area to get long. So I'm going to mark this. Now, when you start seeing these levels all over the place, the levels are changing because the auction's happening in real time. So something like this can go because this is the most current information. So let's just look. I know there was a trader in TraderLab who took short here. We were talking about that. It is a short, unless you're looking for longs. And why would we want longs? Well, let's go back to the main reason. Because early morning, we see shorts. We're looking to fill the gap. We have support at 85, which is our low of the day so far. And we have shorts in this leg. So I'm always coming back to the higher time frame. Do I want to be long or short? Well, I trade both sides or trade a dominant side. You could just trade one side. Doesn't matter. So let's look at the short and the long. There's the short. There's the long. So for me, this was the long. Support's under here. And where am I trying to go? Take out the opening swing high and go to targets above. Because the thesis all day has been get the shorts. This comes into the book, and that's a big slug of, as they say, liquidity. But let's look at where we come. So I took along here, and the idea is my resistance is here. Here, remember? There. And then I'm looking for it to come out the top. Now, this comes into the book, and one of our traders in TraderLab pointed this out, and I have levels here. What I tend to do is I scale. I'm really risk adverse. And that comes from prioritizing what I do in my trade. And I'm looking always to get risk neutral if I can. And yeah, I do take stops. But the goal for me is to get risk off and then let the trade, manage the trade, and either it works or it doesn't, or I take a full stop, or I get a scale and then I get taken. Whatever happens, happens, because we have no control over that. Remember, we're in a casino here. Cards are random, and whatever's going on and how the other gamblers play their cards, it's all random. We have no control. All we control is us, our trade plan, and hopefully we manage ourselves psychologically because of the emotional triggers and the chemicals that flow into our brain when we're under stress and fearful. So if you take a long, you get a scale, and then, hasta la vista. Whatever happens, happens. 10:30, I haven't seen any of this now, so that was the last thing I saw. And now we come back outside. Where's my support? Isn't it here? So anyway, questions. And thanks for your patience. I can't see the questions while I'm narrating this thing. Everything is spread across a number of different computers. So that's why. How are we doing in YouTube? How are you guys? Hope you get something from this. And how are we doing in the Bookmap Discord TraderLab community? If you have questions, throw them in there. And how about YouTube? Please give a like if you're in YouTube, if you like this. You may find it maddening. I understand. When I'm trading, I'm not drawing all this stuff all over the place. I'm doing this for you. So you can learn, and actually I suggest to our developing traders in TraderLab that during replays you start doing this, and even do it during the RTH, if you're actually trading or developing, because you want to train your mind. This is about unconscious competence. So as you do this, and it takes a while, if you're going to learn a foreign language, you don't do this for 2 months and now become fluent. Not going to happen. If you want to be in a career in this business, you got to roll your sleeves up and make a commitment to educate yourself. And that means good education, not nonsense. Okay? And there's loads of nonsense. So you have to differentiate, and I can't tell you what will resonate with you. We've all gone, we've all looked for the shortcut, right? We're all human. We all want easy. We want somebody to hand us the key to the kingdom. Unfortunately, the key is specific to you. You have to find what resonates with you. Most of us want indicators because the work is done for us. We just put them together. It's almost like an erector set, if you guys ever heard of those, you just build something. Well, it's not like that, in my opinion. Now, you may be the exception. I hope you are. But most traders who've done what you've done don't stay in the business, and statistics bear that out. They're all doing the same thing. So maybe it's about finding out something more fundamental, like how the market works, and then getting in alignment. You understand how the market works and realize it's not your indicators. The indicators are output. It's a translator. The thing is, they don't speak market very well. They do, under certain conditions, they work. But they don't seem to work enough where you actually can become profitable. You will have winning trades. If you had nothing, you'd have a winning trade. So what do we have here? 85, remember? So what goes on here? Where's support? What's out here? Let's go and see if we can figure anything out here. Isn't that support? Isn't that support? Isn't that support? Isn't this your outside edge? Let's watch. Isn't that a long? There's your resistance, you see? That's just a trade. And if you're managing the trade, you get taken out of the trade. Are you going to jump out a window, or are you just going to say next? That's what I do, because I don't know what's going to happen. I really don't. So let's look. Where's our support? It's here. And where else is support? It's here. So let's see what happens. Now, this is VPOC migration. This is resistance. I'm not going to keep marking these things. And now this is retail. So if this is too high, I can come down. What's too low? I can revert back. And remember this. Support is here. See the test? See the test? Now, this doesn't have to be your trade. That's resistance. Support is, where's the volume? It's in here. Let me throw a little box around this. What I do is I look at consolidations. It's not complicated. Why make this thing more complicated than it needs to be? Now we use the term complexity to rationalize uncertainty. Let's not call it complex. Let's redefine what this is: uncertain and random. If we can do that, then we can change our mindset from, because who knows this is going to happen here. They could pull, they can do anything. But what I know is, if I'm coming up to a location, which is what that is, and I see this, I'm always managing my trade. I also see the sweep, which suggests a reversal. I've got a confluence of elements. So I got this, and I still don't know what's going to happen at my resistance. The reason is they can pull. So this is not about knowing. This is about structure, trade plan, getting risk neutral. This suggests potential reversal, and then it's just trade management. Where does this thing fail? Here's a trigger. Here's the test. Right here, if you're managing the trade. So if you have your stop back here or wherever it is, up to your plan, and you think it's just a pullback here, we break high, we're going to the moon. What happens here? So I'm below my buyers. Right here, it's warning Will Robinson moment. Buyers come back. I'm now above the seller. I think I'm off the hook. I get my sellers up here. What happens here? I break again. I break here. I'm below any buyers now. This is not looking good. I hit support. I hit resistance. If I can't get back up here, it's a reason to exit or not. I come down here. I get a sweep. I come to support. What happens here? The sweep says up. I get my long. Now, this might not be your trade. This is, I don't like this. I'm working too hard for this. What is this? It's resistance. What happens up here? Microstructure, resistance, chop, sellers below the buyer, selling icebergs. So it's a potential short or nothing. I get the sweep here. What does that say? Potential reversal. This says what? Potential reversal. I've got two things going on here. Let's see how it resolves. Resistance. There we are. Current. Anyway, life of the fast lane. Hope you're getting something out of it. If you're interested in understanding what's going on here, this is a foreign language. If you want to learn the auction, which is the primary basis of how the market works, you're all invited to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube and be prepared to get educated, and also be prepared to sit back, reevaluate what you're doing if it's not working. It may have nothing to do with your persistence. It may have to do with your process. It's very hard to know if you're actually using a dysfunctional process that you're applying to this environment because of the randomness of it and the fact that everybody has winning trades. If you had nothing and you just randomly push buy or sell, you'd have a winning trade. And we think maybe so then we persist or pursue making it better, right? Well, that has nothing to do with the business. That's just gambling. So it's this organization, however you accomplish that. And I know we think we can do that with standard indicators, MACDs and all this stuff and whatever, VWAPs and the rest of it. It's how you deploy any specific tool, and can you find a statistical edge with it? The fact that we're rolling over mid and VWAP here. Well, what does that mean? Do you just automatically sell the mid or the VWAP? No, you don't. Well, you can. I can't. So, but there are times when the mid and the VWAP are appropriate. So what's the difference? And that's where we all struggle, because it's that randomness. Why does it work sometimes? Why does it not work? Why did I sell the mid the other day and got a 30-point trade? And why have I sold the mid 5 times today and stopped out every time? Why? Well, if you can't answer why, then you got work to do, and you might want to visit Trader Lab. And everybody takes stops, so it's not about taking stops. If you're concerned about losing, there's a great book called The Best Loser Wins. It is really about losing. Our business, losing is overhead and cost of production. When I take a stop, I have an emotional response to it, but I also know that it protects me so I can take the next trade. I'm not in the business of being right. I can't be right. So why put yourself in a situation of knowing or being right? Maybe put yourself in a situation of understanding and then attempting to align and accepting the random outcome. It seems to work really well with the casinos. That's what they do. So we're trying to piggyback a successful business model. And we are going to take stops. We're all going to have losing days, and we're all going to have days that are terrific if we actually have an edge. And the difference is, what's the difference between a great day and a bad day? Nothing. If you follow your plan. It's just the random distribution of outcomes. What's the difference between luck and randomness if you have no plan? Nothing. It's gambling, and you got lucky. For me, luck, you cannot take to the bank. Edge, if you execute and you've done the work, in my opinion, and past performance is not indicative of future results, you can take to the bank. And you have to vet it for yourself and build out the business. If you don't understand the business, then you're always going to be doing the same thing. I didn't understand the business for years, so I was always trying to fix something that was defective, but I never knew it because I just thought it was making it better. I did a webinar on it called Trader Groundhog Day because you keep waking up in the same place. Do that for a couple years, see how you feel. Because every time you think you're getting closer, you haven't gotten closer. So if that's you, why don't you call a timeout, call a timeout and come to Trader Lab or get some education that resonates with you. It doesn't have to be Trader Lab, but get some true education, not nonsense and not the Holy Grail and not this is the only indicator you need and all that junk. By now, if you've gone that route, you already know what garbage looks like. And I don't mean to sound a little unappreciative of other education. Good education, absolutely. But there's more nonsense and garbage out there than good education. So you have to differentiate. And if you've gone that route before, what has it done for you? Other than, gee, I learned something new, but what does it do for your outcome? If it doesn't do anything for your outcome, then you got to jettison it. Most of us think the answer is by putting more. More creates more certainty. Isn't that what you're looking for? More confirmation. Isn't that what you're looking for? And why are you looking for that? Because we're wired to avoid risk. The only way we can avoid risk is to have certainty and confirmation. That word is the problem because that means you think you're in an environment that is absolutely predictable. How about it is 100% uncertain 100% of the time? Probabilities can give you an edge under a condition, but it does not create certainty, so you can never have it. Maybe the answer is not in the confirmation and the certainty, it's in accepting the randomness and the uncertainty. Solving for uncertainty is different than putting your energy into creating certainty. Does that make sense? If you're interested in this, use the link in the bottom of YouTube, and you can visit Trader Lab. Any questions in YouTube? Please hit the like. Hopefully you like this. I understand it looks like you just, you fell off a cliff and landed on your head because of all of these. And we don't need all this. This is for you. This is so you can identify structure and why it's important, why the market comes here. If I don't use indicators, it's only because I had to simplify it and get down to what my indicator might be trying to represent. Does my indicator help me get long here? Does my indicator help me understand that I could get long there? Does my indicator tell me this is resistance and that when I break and I get a trigger that maybe I should get out? Does my indicator tell me I can take a short here for a rotational trade back to there? And I'm not saying this is your trade. I'm saying if you can understand the mechanics of the market, however you slice and dice it, subject to your time frame, or I don't like the term time in this, but fractal, you could be long here, short there. Now, I don't trade this myself because I'm not putting risk on for 4 points. I put risk on for larger rotations, but I can trade whatever the market offers. It doesn't matter because I don't know what it's going to do. I put a trade on at a location. I trade towards statistics. If I get taken out, I get taken out. If I take a stop, I take a stop. What am I going to do? What are you going to do? Isn't that trading? We can't make trading something it isn't. We can't force trading to fit something we're comfortable with. What we need to do is overcome our discomfort with the environment. And we can do that by building a trade plan and only interacting when we have a statistical edge. And then the rest of it just happens or it doesn't happen. And, we have winning trades, losing trades, and we have to manage our emotional state, our fear. Biggest obstacle, in my opinion. I believe, and it's just a personal belief, it might not apply to you, that anybody can learn how to trade if they come to Trader Lab. I believe that 100%. And again, it's my belief. However, you got to roll up your sleeves, you got to do the work, and you got to invest time in yourself and your education. You have to manage your education. You have to hold yourself accountable. You have to measure your development. You have to ask questions. You got to post charts. You got to interact with other traders. Our senior trader has over 50 years experience. I've got 45 professionally and out here with you. I've been trading a long time. When I started trading in 1980, indicators were a new novel idea. We didn't have PCs. We didn't have the internet. It was nada, zippo. And you bought a book. Or went to some very expensive seminar and walk away with what most walk away with. Nothing useful. I did. So I'm just telling you, been there, done that. What would you have given or would you give to learn how to trade and to be in the business? Probably anything. I would have. If someone said, and this is back in 1980, give me $10,000 and spend a week or whatever, 2 weeks, and now you will be a trader, I would have gotten the 10,000. And I would have figured out, because that to me would be the ticket. I would have done it. And I'm glad I didn't, because I would have thrown those dollars away. And that's what most of us go for. Psychologically, we want this so bad. We'll pay anything, we'll buy anything, and there's an unlimited, especially now with the internet and YouTube, an unlimited number of pitch people out there selling whatever, and chats and all that, right? There's no cost for this. And that doesn't devalue it. What it does is it says you need to invest in your own development, and you need to be realistic about the business you're attempting to be in. You need to understand this business. And it's not what you think it is. The community, the Trader Lab community will help you. It'll help you. There's trade plans that are shared in there. There's common obstacles. There's frustration shared in there. We all go through the same thing. There's no magic 8-ball. We had one on the trade desk. When I was sitting on the desk, we had a magic 8-ball. It did as well as anybody else, The best answer I got out of the magic 8-ball, should we go long or short? It would say, ask again. You guys ever have a magic 8-ball? Yeah, I see there's a comment about standard deviations there in the Bookmap Discord Trader Lab community. Absolutely agree. I never found standard deviations to be worth anything. It's just like with Keltner channels or Bollinger Bands or any of this. It's just a number. What does that mean? It's no different than a Fibonacci number or anything. What does that have to do with what the participants are doing? Can we just pull a number out of left field and somehow it means something? It means nothing to me. Might mean something to you. And everything works at times. Look at that. It went, we have a Fibonacci extension. What are we doing? Predicting something? Really? Doesn't work. Never worked for me. I mean, and I applied fibs, everywhere. And Elliott wave, GAN. I mean, I'm just saying, I'm just giving you some sense of all this stuff, pivots, and everything works at times. This is the fallacy of all this stuff. And it keeps you doing things that really are just random. So for me, I removed the randomness. Are you guys tracking? Yeah, I've done Gartley. I forgot all about that. Gartley was interesting too. Who was it? Trader Vid? No. I can't remember all these guys' names. Larry Presavino, he did some great stuff too. I mean, I've gone down all those paths, and I'm not saying they don't work, but for traders, they never worked for me, so I got rid of them because at one point I thought more would create more, and what it created was more conflict. It didn't create more of anything, so I don't use any of it. So for me, I'm very much trading price action and interpreting what's going on in the order flow and the volume. That's my thing. I don't need anything more than that for me. And it tends to work pretty well for me. Now, there are other ways you might try to measure some of this, but I find that my ability to read this allows me to get active right here because I know what it says. So, and I know up here, don't forget now, the thesis is longs primarily today. So intraday, I can trade both sides, or here's the or I can just be taking longs and and use the shorts for exits. So I'm only taking long trades today. That's the thesis at the top of the stream. I hope you guys are getting something out of this. I know it can be confusing, of course, but you don't have to make it complicated. You need, if you come to Trader Lab, you'll find that there's, first of all, there's 60 PDFs of structured trades you can download. It kind of gives you a head start like this, This is an IB trade. It's called the IBF. It is a mean reversion trade. It is a long. And this is an actual trade I took, and I just sort of, made a cut made. And you can see I got long there, stop was there, took a scale here. That's the mean reversion. And then, and the target was up here. I don't remember what happened for it because this is from 2020, so I'm just saying there's a lot of this stuff, and you can, order flow phenomena, actual trades, and just screenshots. Remember, there's no cost for this. I just got a lot of requests. This is a short, Anyway, neither here nor there, but that, and there's a full library of webinars on this process. You can use the link if you're visiting in YouTube. So this sets up long, This is resistance. We get through it. We're still looking to come out the top. And why is that, you're asking? Well, because of this, because there's shorts over here. So yesterday, our target was 85, the long. And today, we might be going up first. And these are not recommendations. 9, 10, 18-ish, over time. This is where we're trying to go. So next area is going to be up in here, 9, 10-ish, maybe, or not. Doesn't have to. Remember, the market doesn't have to do anything. It doesn't care. It's wherever the participants find too high, we can rotate back. That's how this thing works. It rotates. So it's always rotating over itself. And the other thing it rotates over is retail traders. It's rotating over retail traders because the shorts in this leg have stops there. The longs in this leg have stops here. If I can't get down, then the shorts in this leg have stops there. And if I can't take these guys out and I get a buy location, I'm going to potentially take these guys out. And then I'm going to take these guys out because the trend is up. Hope that makes sense. Final questions. Please give a like if you're in YouTube. Pete, the IBC, are you talking the short? Pete, I'm not sure what you're asking me about, but IBC, if you're talking short, no. No IB continuation trade. The trend is up. Rotational trading inside a higher time frame fractal. This is called context. So the way to trade today, subject to your plan, is you trade both sides. It doesn't matter. You trade one side. Why would you only be taking longs? It's up to you. Shorts become trade management opportunities. The trend is up. If you haven't noticed, the trend is up. We filled the gap. Where did we go? Here. Key location from yesterday was our target. It's the ETH low. We take it out. Trend is up. Longs. Or whatever. It doesn't matter. You can, subject to your skills and where your setups show up, your structured trades, the structure is here and there. Break high. Test there. Where's the stops? There, 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 there. Anyway, I hope that answers the question. Please give that like. Thanks for visiting Trader Lab today. If you're interested in Trader Lab, use the link in the bottom of YouTube. It's a community of like-minded traders who come together to leverage their collective experience. There's no cost. And I'm going to show you what this looks like. If I can get this over here. This is the, there's a lot of going on in Trader Lab. A lot of charts, a lot of discussion. You can see there's just all kinds of stuff going on here, and you're all welcome to it. There's also a library of webinars. Let me see if I can find that for you. It's pinned here, and all this is available at no cost. Are you a trader or a gambler? Why most traders using indicators fail? Are you trapped in trader Groundhog Day? That was me, working hard, waking up at the same place. Very annoying. High volatility reports, day trading inside higher time frame trends. That's what we're doing today. We're trading inside an uptrend. So you can break this down into any fractal or time frame you want, as long as you can qualify it. That really means range. How your pre-market plan creates a trading edge. That's what we're talking about today. What's your plan for today? And it's a 3-part series I did. You might want to check that out. If you just walk in and wing it, you're at a disadvantage, in my opinion, because other traders are better prepared and know what they're going to do when it or if it shows up. They also know how to change what they're doing based on the development and based on what is revealed by the participant behavior. That's the auction. So what do we know up here? We know there's stops here, and we know this is resistance. So we can get a bump here and either rotate back down, so that's trade management, or squeeze through. Now and it's not a recommendation, 61.15 is a target up here. And it's not a trade recommendation, but we are entering what's called a low volume zone from that higher time frame sell-off day on Tariff Friday. So we can potentially come up here and accelerate. Not a recommendation. We may not do it now, ever, maybe never. Thumb up, please, on the way out. Thanks for visiting Trader Lab. Use the link in the bottom of YouTube. I'd like to meet you. Say hi, introduce yourself, become part of a great community. It's serious community. It's for those looking to build out the business. I'm going to tell you, it is for adults. So if you want to be in the business of trading, this is a great place, I think, to come and kind of start reorienting yourself to gaming theory, operating in the random environment, trade plans, only interacting when you have a statistical edge, and understanding you're in an environment that is 100% random 100% of the time as far as any individual interaction with the other participants. It's about edge. Remember, casinos are very successful operating in a random environment. They don't control the cards coming out of the deck or how the gamblers play the cards. It's 100% random. What is not random? The way the casinos play the games. Our games are the same as the casinos, and they're called structured trades. Hit the like on the way out, and I look forward to seeing you guys real soon in the Traders Lab, and I look forward to seeing you tomorrow. Thanks again.